Hello friends, I'm Chartered Accountant Parag Bhujbal. Today we'll discuss about the provisions of advance income tax which are applicable for financial year 21-22. So, advance income tax is payable in 4 installments. Generally, all assessors whose net estimated tax liability for a financial year exceeds 10,000, that particular assessee is required to pay advance tax. For financial year 21-22, the percentage of tax to be paid before 15 June is 15% of the estimated tax liability, 15 September is 45%, 15 December at least 75%, and 15th March, the income tax department requires you to pay 100% of the tax which is due for that particular financial year. Now, many a times it so happens that the question is raised, why should I pay the advance tax in these 4 installments? The answer is very simple. We carry on businesses or incomes are earned during the entire year, every day. So whenever you earn income, you are supposed to pay tax on it. Now, we cannot expect a person to pay advance tax every day. So as a matter of convenience, government has given these 4 dates: 15 September, 15 June, 15 September, 15 December, 15th March. So you are supposed to pay at least 15%, 45%, 75%, and 100% of the whatever income tax is due in this particular financial year. So what are the steps involved? First is that you should first estimate the total income of the particular year, whatever, from all sources, be it salaries, house property, business gains, capital gains, other sources, rents, dividends. And once you have estimated your total income, then you should calculate what is the income tax which is payable on it. So once you have determined what is the income tax payable, from that, what you are supposed to reduce is the estimated TDS on this estimated income. So what is left is the estimated net tax liability. If your estimated net tax liability exceeds 10,000, every assessee is required to pay this advance tax. Now, who is required to pay advance tax? Generally, salaried assessees are not required to pay any kind of advance tax. Why? The simple reason is that whatever is the tax due on their salaries, it's their employer's responsibility to deduct that tax and remit to the government. So generally, salaried people earning only salary income are not required to pay any advance tax if that advance tax has been duly deducted, if the TDS has been duly deducted by their employer. However, if an employee has any other income other than salaries, like income from rents or dividends or interests or capital gains, then, and if his net tax liability is exceeding 10,000, then the provisions of advance tax are squarely applicable to him. On the other hand, professionals, self-employed, businessmen, corporates, all other people, all other assessees whose net tax liability exceeds 10,000, whatever be the source of income, they are all required to pay advance tax subject to whatever TDS has been deducted. So many times a question arises that since a particular income has been subjected to TDS, do we have to again pay tax on it? The answer is very simple, yes. Why? Because even if TDS has been deducted from any income, what we are supposed to pay to the government is the tax. So if a TDS has been deducted from any income, it need not necessarily mean that no further tax is due. TDS might be 1% or 2%. Tax might be 30%. So advance tax is due payable by each and every person. Consequences for non-payment or short payment of taxes is that you are subjected to paying of interest. Interests are under 3 sections, 234A. This 234A section is applicable from the due date of filing return of income till the actual date of payment of till the actual date of filing of your returns, and whatever is the tax due as on that particular date, you are supposed to pay interest on that amount till the date of filing of return of income. This, so basically 234A is a interest payable on tax due after the return has been filed, after the due date of filing return of income. Now 234B is interest on tax payable from end of the financial year till the month of payment of the entire tax if the total tax paid is less than 90% of the advance tax due. So this 234B mandates that at least 90% of the estimated tax liability or whatever is the advance tax payable by you, at least 90% is being paid before the end of the financial year. Whereas 234C is applicable for non-payment or short payment of any installment. Now we've seen that there are 4 installments: 15th June 15%, 15th September 45%, 15th December 75%, and 15th March 100%. So if there is any shortfall, so for those 3 months of that shortfall, you are required to pay interest on the amount of shortfall itself. What is the rate of interest? Rate of interest for each of this section is 1% per month currently. So 234A, B, and C, 1% each. So I just thought that we will discuss this particular provisions of advance income tax. I hope you like this video. If you liked, please give it a thumbs up, share it, send us your comments. And if you have not subscribed to our channel, do subscribe for getting latest tax related information, financial world news information, information about RERA and all other things. So till we meet next time, see you.